Good morning, everyone. The live stream will begin shortly. Please read the disclaimer. So today we have CB consumer confidence at 10 a.m., new home sales and Richmond manufacturing index, two other orange news driver, and one main red news driver, that is a CB consumer confidence. So we basically have to wait till 10 a.m. before making any trades. I won't be active in the comment section, but I'm just if everything's good on the audio and visual, just please say yes. Waiting for confirmation. Thank you. So let's begin. Let's go to the dollar index weekly chart. So today is a Tuesday, and on the weekly chart we had a rally for these 3 weeks, and then we left a weekly BC level here. We offered buy side, we offered sell side the week before last week, and last week we had rebalanced that weekly BC level. So now I don't think there is any upside objective or some kind of a retracement that we can expect in the dollar index. Now I think it should go for sell side if it wants sell side. I don't think there is anything left for buy side for upside now in dollar index. Let's go to the daily. We had this decline here. We touched perfectly the high of this fair value gap, and we had a retracement upside these 2 days. It was a sharp retracement, and now today it's declining again. So now what I'm watching is, of course, I have this weekly BC level. I think it's rebalanced now. So now what I'm watching is how we react off of this fair value gap. Honestly, I'm expecting this fair value gap to act as an inversion fair value gap if it wants sell side, if it wants to go lower. And again, also, we have this order block here. So if it wants to go below this low, it has to violate the mean threshold of this order block. The body of this candle, it has to violate that level, the mean threshold of that level. But my soft bias for dollar today is bearish. I think it's going to go lower. Let's go to the hourly. And again, we have a 10 a.m. news driver that we are waiting for. So that's it for me for the comment section. I'm not going to look at it again. Solely focusing on the live stream today. So yeah, just I have some water. Okay. Back again to the daily chart. We have the mean threshold of this order block. I'll mark it. Yeah. So I'm watching this level, and if it wants bearishness, it has to violate this level with a body of the candle, preferably. This is a mean threshold of the order block. And also we have this fair value gap here. If I was bullish, I would have used this fair value gap as for bullishness for entry, but I'm now bearish, so I'm using this as an inversion fair value gap, this red one. My soft bias for dollar index is bearish, but for confirmation that my bias is correct, we need to violate the mean threshold of this order block, bullish order block. And then we'll use this, or if when we go below this bullish order block, we will use this as a breaker, a bearish breaker. When we go below it, when we trade below it, we'll use this as a bearish breaker. I'm going to remove these levels. And go to the hourly. This is the daily fair value gap, the inversion level. Hmm. 102.288. 102.288. This is the opening of the daily order block on the daily chart. As you can see, we also have a small little imbalance here. So I want these levels to break and price to go below it, then I'll be confident about, not confident, I do think it's going lower, but that will be, keep breaking the discount arrays and keep respecting the premium arrays. Institutional order flow, basically. Keep institutional order flow, keep it bearish. That's what I want. So yeah, let's go to the 15. I don't think I do need to go there. Yeah, that's my bias on dollar, which is bearish. So let's go to the index futures now. Daily chart. So this is from yesterday. Let's go to the weekly first. Yeah, we had this fair value gap here on the weekly chart, the high, low, and the mean threshold. It's been there for a long time now. We have balanced it completely, rebalance. We have offered sell side here, buy side here, rebalanced it. So now it's clear to go higher with dollar going lower. Also, we had this small little fair value gap here on the weekly chart. We have gotten an yeah, I think we have completely repriced to the high of it. So we have filled the fair value gap on the weekly chart. So now I do think it's going to go higher up to these levels. My bias for this week on index futures is ES going to these levels, which is the volume imbalance and the liquidity void. Let's go to the daily. We had these lows taken out yesterday completely. So how beautifully the body of this candle filled the fair value gap, the daily fair value gap. Now it's Tuesday and my bias for dollar is bearish. So it is risk on scenario. Dollar going lower is risk on for equities. I mean, you can take risk and buy equities and buy foreign currencies. That's what risk on means. And risk off means don't take any risk in equities and foreign equities and index futures and just keep dollar. That's what risk off is. So right now we have risk on scenario, dollar going lower and equities and foreign currencies should go higher if they support intermarket analysis, if they want to go higher. Now they have a free hand. We'll have to see. Let's go to the hourly chart. I've been talking about these two lows for a very long time, and they were taken out yesterday. And I think when we were here around somewhere on yesterday's live stream, I talked about how I am not satisfied with liquidity being taken out in the London session 3 to 4 a.m. something on Monday. I wanted another dip lower into the fair value gap and another dip lower below these lows. That's what I wanted in the New York AM, New York sessions, AM and PM, whatever. But in the New York sessions, I wanted another run lower below these lows, and it happened yesterday. I was not being able to capitalize on that because I was not well psychologically yesterday. There's nothing wrong with me, just was not in the zone. I don't know what happened to me yesterday, but yeah, basically I went long trying to capture a small move higher, and that messed up my psychology for going short again, and it is what it is. But let's move ahead now. Yesterday is the past. Let's focus on the future. I like the fact that how the bodies here are, the low and high are respecting the daily fair value gap. This green one is the daily fair value gap. We've taken out sell side liquidity. So yeah, let's go to the 15. Actually, side by side. Let's mark up Nasdaq as well. Let's first go to the daily, maybe the weekly. There's nothing there on the weekly. We have this small little fair value gap here on the weekly chart. We've repriced to the low of it and completely filled it. To green here. We have this small little dizzy here. This week we have dipped down to the low of it. There's nothing else that I see here. So we'll go to the daily now. That weekly BC also lines up quite good. I want to make it a little darker because it is a weekly level. That weekly BC level also lines up with this daily level. Quite good. That's well. That's good. We offered buy side here. We offered sell side yesterday here. And today, I think we've rebalanced it. So with dollar going lower and ES going higher, Nasdaq can keep along with ES. And I'm more interested in trading Nasdaq because it has better spreads than ES. ES spreads are shit. Let's go to the hourly. I'm not going to mark the daily level because it coincides rather well with the hourly level. So, sorry, the weekly level. So the weekly level, I'll use that. We are to the high end of the weekly level. Weekly level, we are at the high end of it. So let's see what we get after 10 a.m. Yeah, I'm going to only show Nasdaq chart now. And I'll talk about the things that I'm watching in ES and dollar. Yeah. So in Nasdaq also, I talked about this in the previous week, that how I'm not anticipating a SMT divergence. How I am saying, when we were around here, I remember this, when we were around here, when it was falling, I talked about how I am not anticipating any kind of SMT divergence, how I am thinking that even if ES takes out liquidity and Nasdaq doesn't, it will take out liquidity in the future and it will go down. How I am not anticipating some kind of an SMT divergence and then it going higher. How I said that both of the indexes, maybe not together, but they will take out this liquidity below this low because it makes sense. It does not make sense to form an SMT divergence here. And it did take out the liquidity yesterday quite beautifully, and I was not part of this move. I took a loss around here. Yeah, we have this weekly levels outlined here. We have taken out liquidity yesterday quite well. Now we can expect some kind of bullishness in equities. 4 minutes to go. So yeah, yeah, this fair value gap here, but I'm actually interested in this, how we react inside of this fair value gap here. That can be refined up to this big city here. And how well the consequent encroachment of this fair value gap lines up with the high of the weekly BC, this green line here, and my mouse cursor right now. That's the consequent encroachment of this fair value gap. That's good. So yeah. Why did you need another run lower on ES lows? Because it didn't take out. I will answer questions, but because now I am waiting for the news driver, that's why I'm answering. But please don't expect me to answer questions. But now I'm free, so that's why I check the comments. And to answer your question, why did I expect ES lows to be taken out again yesterday in the New York session? I was expecting this decline lower in Nasdaq as well, calling it a six sister, and also in ES because I talked about it yesterday. Why? Because I'll show you. Yesterday, this decline here was in the London session on a Monday. And if you toggle back to the regular trading hours, you will see kind of and this is where 9:30 opened. Look at this candle right here, the opening of this candle on 9:30. It's yes, the London session took out the liquidity, but did the New York session did that? And we are trading US equities. So the liquidity is heavy in the New York session than the London session. That's why I don't trade the London session in equities, in US index futures, because yes, there is a movement. Yes, there is liquidity there as well, but not as heavy as the New York sessions. When after 9:30 there is heavy liquidity, there is a huge influx of liquidity after 9:30. So taking out some kind of a buy side or sell side after 9:30, that's more important. That is more uh you know that is more prominent. Not prominent is not the right word. That is more beneficial for smart money. That's where they get heavy liquidity. And I talked about it in the previous session, and you can watch that replay. It's available on YouTube on the live tab in my channel. So yeah, back to today. At 10 a.m., we had the news driver. It repriced up to the high of the CB closely, pretty much filling the gap here. See this low here. I'll say it again. I'm expecting bullishness. ES is showing some weakness, and that is good. Good for me. We have back and forth, back and forth, back and forth type of price action. If you look at it on the 1 minute chart, choppy price action. Even on the 5 minute, you can see how back and forth it is. The site liquidity taken here. We have a opening range gap here that lines up with the consequent encroachment of the weekly fair value gap. So that's good. We have two relative equal lows here. So I'm watching how we react off of this fair value gap. I'm watching that. What I'm expecting is this decline here to be a Judas swing for retail to get trapped in bearishness. But I'm expecting a bullish move. I'm trying to speak very clearly. I'm eyeballing how we have repriced up to the consequent roughly. Don't measure it with the Fibonacci and kill me for it. But how we have repriced up to the consequent encroachment of the new opening range gap today. Consequent encroachments, these levels are roughly eyeballed unless they're on a very higher time frame chart. Because if I sit down and draw every consequent encroachment level, I'm being honest, if I draw another some kind of a dotted line here, I'll get confused. What is that? I'm drawing this weekly levels because these are higher time frame levels. These are far apart on a lower time frame chart. So that can be I can work with, but not on the lower time frames. Okay, so we have taken out sell side. SMT divergence, ES did not take out the 8 o'clock low, this low, Nasdaq did. ES looks like this relative strength leader. Relative. Maybe if it leaves some gap here, leave this as breakaway. That would be optimal. Now, if it's bullish, I want this fair value gap to support price. I've entered a long, like you see in this, whatever this is. My stop loss is below the breakaway gap. We have a bullish order block here. And yes, ES is the relative strength leader, but I'm expecting NASDAQ to perform to keep up with ES. I'm expecting NASDAQ to, do the same as ES is doing, because I'm not trading ES. It's my favorite pair, but the spreads are killing right now. I want this fair value gap to support price. Violate it with a body. This is good. I like it. ES is rallying higher. Nasdaq is not. I wanted to trade ES. It had a better setup. But you know what permits me is only Nasdaq. I like how we closed the body of the candle. I like that. I'm going to take a partial above this high. Nasdaq is definitely the weaker one. ES is moving better. And it troubles me a little bit. But so far the setup is still valid. So I'm going to keep it. I entered with the low of this inversion fair value gap. Yeah, we have a 2 minute fair value gap here. So inversion is still valid. This is for 1 minute. Yeah, I may get stopped out now. I've not been stopped out, but it's still running. I'll keep it running. I mean, it's still valid. And the meaning of a breakaway gap, it can touch it, it can come to the consequent encroachment of it, but I don't want it to completely fill it. That's what I want with a breakaway gap. Now I want it to rally higher, rally hard. I'm going to move my stop loss up to the body of this candle now, like right here. Not wanting it to to, not wanting it to come back again below this fair value gap. Minimizing risk to half. I mean, this rally right here has validated my setup in my eyes. If I was not already long, I would have longed when this candle closed and we opened here and we just touched this high of this inversion fair value gap. I would have longed right here. If I was not already long here, I would have longed, I would have gone long right here. I'm not expecting price to come back and break the low of this inversion fair value gap. I'm expecting it to support price. Now I'm going to wait a little bit and then move my stop loss up to break even after we break this fair value gap. This. And then let the trade run. If you look at it on the 15-minute time frame, you will be thinking that what the hell is this? Because the 15-minute is not clear right now. Even the hourly. After we break this fair value gap and move above it and start supporting price, I will place my stop loss up to break even now. Yeah. I've moved my stop loss up till around here. Which is break even. Yeah. I'm break even now. Up 1 hour currently. If I close the trade after some time now, I'll be, in profit. I mean, I'm in profit, but I'm trying to say is I have diminished all my losses if I close the trade right now. I like the fact, see how the body is opened here, high and the low, how it respects this inversion fair value gap. I like that. Now expecting price not to break this inversion fair value gap and use this fair value gap and go higher. And also, I'm not moving my stop because I'm expecting deeper retracements in NQ. And why? Because yes, it is the, you know, how do you say? It is the weaker pair as compared to ES. So it will have deeper retracements. And this is not good, but we'll let it be as it is. We'll get stopped out at break even, or it's going to work in the favor. Preferentially, I would want this candle not to close here and close above this, above or at least respecting this inversion fair value gap. The wicks did the damage. The bodies will tell the story. So preferably, I want this candle right here to close inside here, or maybe above it. Inside here, it's okay. I like the fact that the bodies did not violate the this inversion fair value gap. Stop losses at break even, so it's not a concern. It's not uh, a headache to me. I will let the trade run or get stopped out at break even. ES better, very much better. And why we are getting this kind of a retracement? Because ES took out this high. Now, if ES retraces a little bit, Nasdaq will have a deeper retracement because it is relatively weaker. And this is the trick part about me trading Nasdaq today, because it is relatively weaker, so it will have deeper retracements on me. Then I don't want to endure, but I have. And yeah, it's a double-edged sword. When some days Nasdaq will be stronger and ES will be weaker. So 5 minutes. Three. I might have gotten stopped out. Yeah, I am stopped out. Now, in hindsight, I'm thinking I should have, taken a full profit here and covered my losses. I'm down minus 1.5 R right now because of yesterday and the day before that. But it is what it is. I may still enter again if we go above this fair value gap. This fair value gap right here defines the narrative for me. Okay, I've entered again. Stopped out. Too aggressive of a stop loss. Too aggressive. It may still move in my favor, man. The stop loss was too aggressive. It literally just stopped me out and then think it's preparing itself to go higher, like accumulating right now. I've entered again. And if I get stopped out right now, I'm done for the day. But I've entered right here. I'm stopping right here. So to target these highs. If I get stopped out right now, I'm done for the day and maybe I'll take a break then. But I think the idea is still valid. Mhm. Should rally now. Should rally now, and this inversion for value gap should support price. The problem is not in the bias, the problem's in the asset that I'm trading, that is Nasdaq. ES is rallying good, but Nasdaq is like struggling to keep up with it. But so far, it has not violated. It has violated some discount arrays, but so far I think the setup is still valid. The bias on it going higher is still valid, I think. Bullish order block. I think it should rally now. I think it will be an expansion move, not expecting retracements. I mean, we have to expect retracements because it's Nasdaq. But some kind of an expansion. Yeah, I've gotten stopped out again. That will be it. I'm done for the day.